All right, let's go to sector spotlight because we're going to talk about energy, which was the biggest losing sector yesterday, obviously. So, and then today we have an IEA, tricky that one, IEA inventory report that said that high oil prices might be starting eating into demand, although they did say that demand constraints would keep oil prices high, but that demand is falling off due to high oil prices. We saw an inventory report yesterday that showed higher inventories. Okay, do you want to stay clear of anything that have to do with oil, or do you really think that maybe you want to start picking away because at some point our oil prices will go higher?
Well, again, we don't know what inning we are in here, but all I know is that we try and give you guys a play-by-play here. We've been watching the OAHs. It's been on the morning call probably 10 times in the last few months. First time when it did that faulty breakout at the highs. Then we tried again when it had another tight area. I got to show you this chart here because the chart has been telling the story here. I don't care about all the data. The data is like secondary, which it's helpful, but technically we've been going lower and now we're at a crucial point. So if you look at these OAHs real quick, remember we talked about the top here, can it go higher? Pulling down day. Okay, that led to a lower move. Then we talked about here again, trying again, but if we break this, 158, you got to get stopped out. So now, all of a sudden, look where we are down to 146. If you take a broad look and see where we came from, this has been a huge rally, okay, from the lows here. And then, you know what, remember that pattern that we talked about? What was that pattern we talked about on the OHs?
I want to say head and shoulders, but I don't know.
Oh, yeah, that was it. Head and shoulders top.
Quiz time.
And it was important because a lot of these times these head and shoulders tops have not been working because support's been holding. But if you look here for the first time, this pattern worked. That means we're in a bearish tape in this group. Here was that left shoulder, the head, the right shoulder, the neckline, and we broke this neckline. And then we retested it, and now we're heading lower again. So what's important here about this pattern here, it helps measure a move and gives you some points of reference.
Okay.
The measured move is from the top of the head to the neckline, and that's where you get your area to cover your shorts if you had the luxury of being short and followed this, or maybe even nibble long. So if you look here, one more time, closer look, from the head to the neckline, from 165 to 155, that's about 10 points. So if you take 155, you subtract 10 points, you get down to 145, that's about where we're opening. So if you're short, I would be covering into this zone, and then maybe if you do have a long-term thesis and you have to buy something, that's an area I'd rather you buy around that 142 versus that the high 150s where you should have been selling instead of buying.
Because here's my thing. With the fundamentals, it seems like they're being used as an excuse to sell. Because if we go back to 2008 when oil was at 148, there was no real demand fall off. The world economy almost collapsed. That's why demand fell off, not because of high prices. So granted, the oil prices at the pump, gas prices at the pump are the same right now almost as they were in 2008. But why are we thinking this time is different when we're in a nascent recovery globally? Slow, but it's there.
You know what? Sometimes the market forecasts 6 months out, and maybe we're not as robust as everyone thinks. Maybe they're indicating, QE2 coming in to an end. Maybe all
I was going to say, I wonder if it's fear that we're going to lose that stimulus in June, which is just a couple weeks away, so it's sort of anticipating that anxiety.
Right, so if we go low enough into the end of that program, maybe that's when we'll look for a bounce. But for right now, we're technically breaking down. When you technically break down, you get out of the way, you get short, you get into a healthy position so you can handle the downturn and you can create an opportunity for yourself at the right time.
So at the right time, what's the subsector you're going to be looking at that is the right time? Would it be the integrateds? Would it be the drillers, the refiners? What's that go-to sector then?
Well, we'll see that when it shows its face. We'll see that when the futures keep going lower, the market keeps going under pressure, and we'll see that group hold up best. And when that group holds up best, that's the one you go to, and that's the one you start with. So when the market bounces, you have the relative strength working in favor, and that's when you start jumping in. But for right now, all you do is put together a plan, and then we wait for the market to confirm it, and we have some time for that to happen.
All right. That's good. I just have to say drillers. Can we just look at a Halliburton and Schlumberger real quick in terms of because for me, the sector that you want to start looking at on a fundamental level might be the drillers, especially if we're going to see a supply crunch continued in Libya, and also if OPEC's not going to release enough supply, you're going to have the integrateds who really want to drill, and this group has been kind of beaten down in the last couple weeks, so I wonder if that's a place to look at. So if we look at a Schlumberger down over 6%, trades at about 11 times current EBITDA, are they there yet? Not yet.
I would say they're getting pretty close.
Okay.
Obviously, this looks very familiar to the OAHs, where you have your high, a double top, a lower high. This was a break. It's below moving averages, coming into some support. I think this SLB could get below 75 before you start looking at it, or maybe even this 200-day moving average. So I think a lot of these charts, like a Schlumberger, you can look at all of them. You can go through Halliburton, DTO, all of them. I'm not going to put them all up. They all look like these OAHs. And when the OHs find that level of support and we see the relative strength, we'll have them here for you. They're just not ready yet.
All right, and with that, we'll be back